that I'm creating. It's called the Secret Millionaires Club, the Multi-Millionaire Elite Club. There isn't currently one that I know of that exists quite like this. And my inspiration for this idea is bringing together people who are between 2 million net worth and 100 million net worth into an elite circle where you can do some cool shit, network, make money, go on mastermind trips that you can then write off, and sort of built an elite club with an elite membership behind it that could be for charity, that could also generate profit if we were to buy properties, say in Costa Rica, the Bahamas, Florida. And as part of this elite membership, we could have an annual retreat. And the entire trip could be a mastermind where a few people put on different presentations, or everyone in the whole group has to contribute in some way. And we all teach each other and we all learn from each other. And the cost of membership is more than made up by the investments that we make as part of this group in each other, as well as potentially in like real estate, businesses, charitable organizations, and more. So super excited about this idea. I want to surround myself with people who are at least at my level or at the next level. And so I created a group on Facebook to start. There's a WhatsApp group that's going to be created as well. It may become an actual organization with a membership that has to in some way vet or verify that people in the group have at least 2 million net worth net of all liabilities. I'd be also okay if you could show 2 years of $1 million of income, or at least 1 year a tax return showing $1 million a year in income. I think that would instantly qualify you, whether you had the 2 million or not. You'd be a high earning entrepreneur, 7 or 8 figure entrepreneur, and that's net, not gross. Net worth would be all assets minus all liabilities. So if you had 5 million in properties, but you had 3 million in mortgages, you'd be just at the line. So yeah, that's kind of the cool thing. There might be some opportunities too within this group to, create mastermind events for people who aren't in that level. And maybe a few of us in this, group want to give back and want to mentor. And so there's gonna be opportunities to do that too. Like as far as the lateral movement goes, there'll probably be a group for people watching this who are not, multimillionaires yet, who want to get there and want to move towards that. Because I think a lot of us who've made or had some success or built a business or done something in business that's allowed us to grow to a certain level, I think a lot of us want to give back to. So that's a big piece of it. Yeah, also my regular Q&A every Wednesday, 7 to 8 p.m. We're here. So if you guys are watching this and you want to have your questions answered, shoot them in the comments below. We're still doing that too. I just thought, what can I title today's stream if not the Secret Millionaires Club? And because a million's really 2 million today, like if you're a millionaire, 5 years ago, that's the same as being a multi-millionaire today. With inflation, $1 million barely gets you a house in the suburbs, right? So a million isn't really the goal anymore. Like even 2 millions, I mean, you're getting there, but it's not really the level you need, I think, to be in an elite club or have the ability. The goal is that you have people who can help you to elevate in your business and your personal life. Maybe you just want to be able to go on trips to say Costa Rica or the Bahamas or wherever and stay in cool places that you maybe own a portion in, or maybe you don't want to own anything and you just want to go, and the cost of your trip could be made into a ticket which you could write off entirely against your business. So there's just tax advantages, networking advantages, so many key advantages to building something like this. And I'm like, I made an Instagram post a while back and I started tracking who in my network is wealthy, and I'm like, geez, I know a couple of hundred people who have at least a few $1,000,000, and I know some people who have 20 million, 15 million. And I'm like, if I put this group together, we could collectively have $1 billion net worth. Maybe I get to 2 billion. Imagine having $2 billion collectively as a club or a group, what you could do with that, right? Like you now have the power of a small city. There's a lot of fun you could have. There's a lot of cool things you could do. There's a lot of good you could accomplish from a charitable perspective too. There's, a lot of plugins and add-ons we could sort of build. And a lot of us at this level we're just having fun, right? Like what next? What do we do? And so part of that is philanthropy and charitable organization stuff. And part of it's like the circle of friends and family and people around us before, when we were, elevating and grinding in the trenches, they don't have the same mindset that we do. And you need to circle yourself and surround yourself with people who have that mindset that is going to be helpful. So that's why I'm going to start this group. Maybe there are versions of this that already exist, but I'm like, I need to put my people together. We need to get a WhatsApp group going. We need a Facebook group going. So the group exists. I believe it's called the Multi-Millionaires Club on Facebook. If you go on my Instagram at Mike Rosehart, I've made like 10 posts about it today. 10's a bit of an exaggeration. I'm being a little facetious. Maybe like 5 or 6 posts today where you can find it. You can join. At some point, we will vet the members. Currently, there's 3 questions to join the group. 1, is your net worth over $2 million? That means, in brackets, all assets minus all of your debts and liabilities equal your net worth. Number 2 is like, is your income greater than $500,000? That's net. So if you make $10 million a year at restaurant, but your net on that is 500 grand or like say 300 grand, you wouldn't qualify. Even though your business is doing $10 million in revenue, you're not there from an income perspective, a net income perspective. And the third one was having greater than 10 million in gross assets. That's, to me, enough. Like if you have more than $10 million in gross assets, it doesn't really matter what the net is on that. You're probably at that level where you're ready to join the club. And we can, split hairs over the differences, but that's sort of the minimum criteria. There may be an elite circle or council within this group that maybe has like the ultra players on it who are like the 10, 20, 30 million, 50 million, 100 million net worth kind of people who maybe want to take a steering role or have that experience to lead a steering committee of some sort. I'm just throwing ideas out here right now. It's not fully planned out. The group exists. Feel free, if you qualify, to join it. I've already found a few people who have been joining it who are not qualified. Naughty. We will make another group for those people who are like a Millionaires Club, but striving towards having 2 million or 3 million or the minimum requirements to get in, right? The idea would be that this circle of people that like $10,000 for a 2-week mastermind, or even putting $100,000 in to buy a building together. If 10 of us got together and bought a small island or something for fun, and we did masterminds on it, and we had fun with it too, and it was all tax write-off. And we just, like 100 grand is not a lot of money for someone who's got a lot, right? But if you're just, if all you have is $1 million, 100 grand might be a lot. If you've got 20, 30 million, 100 grand's like, it's almost a rounding error. It's like play money, and if you could find a way to get do some good in the world and have some fun along the way and build an elite network of people who you can, rub shoulders with, share ideas, cross-pollinate. I think the cross-pollination through this group could be pretty cool. And maybe there's an NFT in this too. There's people have been messaging me today already. They're like, dude, like some people I talk to make NFTs. And he's like, for like 10 grand, you could make an NFT membership like the Bored Ape Yacht Club kind of thing for your group. And like, they'd have to put up actual money to have membership in the group. And then you could take the proceeds, don't make it for profit, like just reinvest it in something, like buy a building or something. And you get, sort of a stake or a right in that sort of entity, and you could do more with it. I don't know, I'm throwing ideas out there. I haven't, fully thought it through. Sorry again about my hair being crazy wet right now. I was just going for a swim. We have a swim spa, and I was swimming against the current. It's like 16, 17 feet long, so it's nice for the kids to get in there and they jump around and have fun. So we haven't been that I was in Florida, right? So we're back in Canada, and I had to, the water was nasty in it. So I had to drain the water in it and refill it and put new chemical in it and all that. It's like a pool that hadn't been maintained for like 2.5 months while I was gone, almost 3 months while I was gone. So I had to get that going, and now it's going. And unfortunately, I love it. It's my favorite, little toy that we have on the property, but I have to sell it because I'm putting in a pool this summer. So there's not room. I have to downsize to a hot tub to make room for the pool. So I'm sad to have to sell it, but I have to post it on Facebook or Kijiji, and I'm sure someone will buy it. I'll put it up for a deal. But yeah, that was my ideas for that. I just wanted to spend the first like 5 minutes of this stream just saying, hey, there is this club. So if you're watching this, and like anyone who's got a property in like LA, Toronto, New York, Vancouver, whatever, pick any major metropolitan city. If you bought a property 5 years ago, or 2 properties 5 years ago, you're probably already a multimillionaire. Like everyone I know is multimillionaire that has owned real estate in the game for more than 5 years. Like all the guys, when I was coming up and I got my first property in 2012, I was grinding my first renovation. And all the people that I met in I think everyone, pretty much any real estate investor that had more than 2 properties was able to, I can't think of anyone in that group that had 2 or more properties that was able to get to everyone's been 2 million, that has been in real estate for as long as I have. You buy like 2-3 properties, you get there. Unless you had a spending problem, a drug addiction, real estate's been very, very good to us. And most of the business owners I know too, who 10 years ago were just grinding the trenches, same as I am, have had now 10 years of growth. And most of us, are at a stage where we're ready for the next thing. And it's like, what is that next thing? How do we grow? How do we engage ourselves in a way that's meaningful? And I think this group will answer some of that. And I don't even know if I'm the one who's going to be spearheading it, Probably not. We have one member in the group right now who offered to be an admin, and they're in the group just volunteering. So there is someone in there who's not a multimillionaire yet, but they're striving towards it and they're offering to be an admin. So there might be some people that get in through administrative roles who are, you know, offering time to be part of things. But yeah, we'll see. We'll see. I have no concrete plans. I don't know what it looks like yet. Hey Corey, yeah, it's a pretty cool idea, right? It's just, and I'm sure it's been done before, but hasn't been done in Canada. If it has, I've never been invited, haven't heard of it, and so I thought I'd just create the group. And there could be more than one group. Why can't there be more than one? There could be lots. Lots of people I've seen in the U.S. post groups that are part of masterminds. They pay 50 grand a year to be part of these masterminds, and that's different than what this is. This is like a club where, you know, I'm not trying to sell you anything. If you're wealthy, you can just join this group and you can pay for your own way and come to the masterminds, whatever. Like, it's not, I'm not selling knowledge or courses or shit like that right now. That's not what this is. At this level, you know, there is a pay to play element. Like, you can't come to the Bahamas or Costa Rica or wherever we go without paying to get there. So you, I mean, you're gonna have to cover your own at least. The hope is that in going, one, you have a kick-ass time. So like that's worth the money alone. But then two, like, we can actually make money by growing together, doing deals together, or you know, expanding our mindsets and bringing that back home and growing our businesses. And so the network piece is huge. It is a lot about who you know as much as it is what you know. So if you can improve what you know while improving who you know, that's a win-win. So yeah, I definitely recommend anyone watching this, even if you're just watching this and you're like, you're new to the game, new to the grind, why not? And if you know someone who would be a great candidate for this, who's, you know, like 40 years old and just stuck in the rut, and they've maybe made 10 or 20 million, but they don't know what they want to do next. They're lost. They have a terrible circle of friends from a, you know, goals perspective, from a, you know, a motivational entrepreneurial perspective. And they need to surround themselves with more of that and introduce a few of those friends. This could be a place to do that. And I think that, yeah, totally. He's already in the group, so 100%. Sounds amazing. Hey, thank you, Omega. Thanks, Jonathan. Ishi, hey, how's it going? Anthony, good to see you on as well. Omega says, Mike radiates the type of positivity that's needed. So many awesome projects going on. Thank you. Appreciate the positive feedback there. Yeah, I have too much going on, to be honest. I need to be peeling back and disposing of things that waste my time and focus on things that are really great uses of my time. I spend a lot of my time, and some of it I wouldn't get rid of. Like, I probably spend 30 hours a week just with my 3 kids, and I wouldn't trade that for the world, right? But maybe I could stop doing, like, and we have a cleaner already that cleans our house, but I'm just saying, like, making meals as an example. That's not a good use of my time. I probably spend 30 minutes a day thinking about what I'm going to eat. Now, I enjoy food, so like, I don't mind the process of thinking about what I like to eat, but is it the most efficient use of my time? Could I spend, you know, or like, there's so many examples of like managing contractors at my house here. Like, I spend like 2 hours a day doing that, and like sending e-transfers to the contractors. Why do I not have a bookkeeper doing that for me? What is wrong with me? Like, at my level, I should have a personal assistant that's helping with all these things. And that's like just one little thing. The last night I was doing some goal setting, and I was watching a bunch of YouTube videos, and I'm like looking at, you know, where I'm at, and, you know, I've exceeded some of my initial goals, but I have so much more potential that I'm not living up to. And I'm just wasting most of my days right now. And I need to really surround myself with better mindset, better energy, better, I need more help too. Like, I can't be a one-man army. The next level involves having rock stars around you. And so anyway, this is an attempt at growing that. Bill says, yo, Mike, been keeping up with all your stuff for a bit now. It's crazy motivating. Gonna make it into this club one day. Right on. That's what I want to hear. And if you're not there yet, but you're getting closer, just remember, I have friends who had 0 2 years ago and now have $5 million. Like, I know people who have just gone 0 to 100 so fast using so many different business techniques. Real estate is a business. So if you're here for the real estate, you're actually here to build a business. Now, when you build a business around real estate, in my opinion, capital preservation is like it's the number one capital preservation business. The risk to reward is disproportionately amazing. and the leverage you can get related to real estate is fantastic. So I'm just going to leave that there for a sec. But for those people watching, I still think real estate is a fantastic vehicle to build wealth fast. It's a lot of work, and you've got to build systems and hire the right people if you want to do it at scale. And I recommend doing it at scale because you could do like 2 flips yourself, or you could do 8 flips by outsourcing and make way more from doing 8 flips and making less per flip and spread, have less risk, and so on and so forth. So there's just so much you can do from the flipping perspective, the buy and hold perspective. You could build whole Airbnb businesses or property management businesses, all of that around real estate. There are so many different businesses, wholesaling, assignment businesses, everything you can do under the sun. So yeah. Hey Will, how you doing? Good to see you on. Appreciate the feedback. I'm just chilling right now, obviously doing the live stream. I just went for a swim, so that was nice. I gotta brush my hair. Whenever I get my hair wet, I have like really curly hair. So if I don't like brush my hair, it gets like insanely ratty. And I actually cut my own hair. I haven't had a haircut. Sorry, I haven't gone for a haircut in 4 years. I cut my own hair. And again, another terrible use of my time. My original thought process was, though, I can cut my own hair in like 20 minutes, and I'm never upset with how it turns out. Also, the difference between a good haircut and a bad haircut's like 4 weeks. You know, the time to go drive to a hairdresser 30 minutes and then wait 15 minutes in the parlor to get seated and then 40 minutes to get a haircut, which admittedly would be a better haircut than I could give myself most of the time. And then having to, you know, if I'm traveling or something, I'd have to find a new barber, which is a pain in the ass. And then, you know, you gotta drive back home. So it's like, it's just quicker and easier to do it myself. Lazy me. Anyway, sidebar there. Not much going on. Just chilling right now today. Love the idea, would love to join the club, but not quite there. So Eileen, you know, hopefully you can get there soon. There'll be a group, I think, that I will also create for, maybe I'll call it like the Millionaires Club, and it'll be like part and parcel, or there'll be some crossover. It won't be as elite, but there'll be still opportunities to connect and network. So, and as you move up, you can have something to work towards. Maggie, it might be in the wrong group. Just go on my Instagram at Mike Rosehart, and you can see me posting there. I think it's like the Multi-Millionaires Club. I don't know. I double check the name, but I'm pretty sure it's Multi-Millionaire is the first words you'd want to search, and they're 2 separate words. Yeah. Just join that, answer the 3 questions. Hey Mike, do you sell on Amazon? So I don't sell on Amazon. I've never been an Amazon FBA guy. I've never had an Amazon business at all. I have friends that do that and make great money doing it. A business that I used to own, medical business, we would sell on Amazon. But I personally have never taken products and put them on Amazon. I've owned a business that used to do that tangentially. It wasn't the primary means of selling things, but did sell things on Amazon. I mean, it's same as Shopify. It's another great way to, if you can buy something for less and then turn it around and make a profit, that's a great business to be in, using marketing or most of the time it's marketing, but it could just be like, you know, a niche type of product that, you know, with good branding and good marketing descriptions and things like that can really go far without any promotion at all. Hey, how you doing, Tom? Good to see you on. 100%, can't get your time back. Hey, Aaron, how you doing? Steven says, hey, Mike, how's the wheel running? So by the wheel, you mean in the stock options world, you would sell naked puts until you're either assigned or you get money for nothing. If you're assigned the shares in the companies that you want to hold, you then hold those and you sell calls on those companies until those shares are called away. And that's the full circle of the wheel. You end up with your shares getting called away, and you get a profit both when you're assigned the shares, you get a discount on those shares, and then when they're called away, you get a profit again. When they're called away, it's called running the wheel. It's a great strategy. It works really well in a sideways market. It works really well in a rising market, and it works pretty well in a declining market if you apply the appropriate amount of bear call spreads to protect on the down days. However, I sort of diverged away from my original strategy, and I just started buying equity in, I would say, December. I'd recovered entirely by December from the Newegg short that I did. That was not the wheel at all. That was me shorting a company that deserved to be shorted, which ended up going to $5 a share. But I got squeezed at $70 a share. Went back down to five. Would have made $5-10 million on that play if I was able to hold it out. But they margin called me, get liquidate about half my position and forced me to lock in a loss. Again, total idiot. Deserved what I got. Anyway, recovered entirely from that in like 4 or 5 months. I made back that whole 1.6 million just running the wheel. So I know the wheel works because I made over 100 grand a month doing it. But took a break from the wheel. I was like, started buying a bunch of tech stuff. I was like, man, PayPal's beating up like 30-40%. Facebook was down like 20% in January. And I was like, geez, I'm going to jump on this. And it was like catching a falling knife and just cut my hand right open. I bought a ton of tech names that got obliterated. So most of that, I have two portfolios. The one portfolio is way up right now. It holds oil, like a lot of commodity stuff, utility stuff, dividend play stuff. That portfolio is up 7 figures. I'm doing very well on my dividend portfolio. It's slightly larger than my options portfolio by about 10-20%. The other portfolio that is fairly heavily tech and growth concentrated was doing very well up until January. I was way up. And you know what happened if anyone's been following what we went through from January to, let's say, a week and a half ago when I cleared half of my positions. Before we had the best week in the last 3 years, we had a 6% run-up week last week. I cleared half my positions and went short to hedge. I'm still net long, but I started hedging some of my positions. And I was like, I can't take any more bleeding. It's just too painful. I'm at my stop loss. And so I cleared half of my PayPal out, half my Facebook, half of a bunch of company positions that I had that were beaten up severely. That's painful. So I'm currently down, year to date, I'm down about like 12%. So I'm tracking the QQQ, I'm tracking the NASDAQ. I've performed year to date about the same as the NASDAQ, which is shitty. Last year I was doing so well. Net, my whole portfolio is still beating the NASDAQ, but that's because my entire portfolios together are not benchmarked against the NASDAQ. But the portfolio that is benchmarked against the NASDAQ, that's what I use as my benchmark. It's about performing the same, which is down on the year. I think we're in for a rocky year. My forecast is that right now there's a bit of euphoria. It could go higher. I think we're going to have some sideways trading where there'll be some highs and some lows, but I don't see us having any real meaningful growth this year as they continue to tighten and stop printing and raise interest rates while we're having the highest inflation we've had in 30 years. We're at early 90s era, late 80s type inflation levels when you adjust for how people actually spend their money, like housing, gas, transportation, vacations, food, specifically like pork and meat and some of the higher organic stuff. It's it's tough for people on salary right now. I'm thankful that my assets have appreciated with inflation. It's, it sucks that inflation creates a ton of tax liability because your building appreciates 100 grand and the government takes half of it, right? So they print money to create inflation, which inflates all your assets so they can tax the shit out of you. So then the inflation actually helps them pay back the debt. Inflation's very, very good in the short term, not in the long term for an economy, but in the short term for them paying down their debt and raising revenue from a tax perspective. But how screwed up is that, eh? Oh, I got a super chat. Hey, thank you for the super chat. So Eileen says, I'm planning to invest in Florida this year. You're a big inspiration. Hey, cool. I've been going to Florida for 7 years now, almost every winter. I didn't go in 2021 because of COVID, but in 2020 I went twice. I was actually there just before COVID came. I left March 1st and came back. I was there in January, and then I was again there in February and towards the end of March in 2020. And then they barred the border. They blocked the border up, which sucked because I had a beautiful property there. We had a mansion and we ended up selling it, unfortunately, before this big boom that took off. So we gave away, my partner and I gave away probably, I don't know, $500,000-600,000 US in capital gains in like an 8-month period after we sold. It really sucked. I wanted to get down there. We had some bad contractors. One of our contractors got COVID, horrible property management in place. And there was no options because I couldn't cross the border to go there and crack the whip on these guys. And anyway, a number of things went wrong, but overall we didn't really lose money on it, which is nice, I guess. We did sell it for more than we bought it for, which kind of covered the renos and the holding costs. And if you remember what happened in Florida in March 2020, full Airbnb calendar, 10, 12 grand a month, all canceled, full refunds, zero nothing, 100% vacancy for like 6 months in Florida. That was real. Most of the people I know at that time were, losing 5, 10 grand a month, just a piece of dust floating here. I'm doing construction in the house, and the cleaner didn't want to go in here because there's a whole bunch of crap in here, so it's dusty as hell in here. Gross. I lost my train of thought. Florida. Yes. Thank you for the super chat, by the way. So I'm going to prioritize any question as a super chat gets priority. Mind sharing your top 1 to 2 tips to find off-market deals. So there are also decent on-market opportunities if you're quick. There's a lot of stuff too, just on Zillow. Like someone will just throw something up for sale by owner. Facebook Marketplace, I found a ton of stuff. There are a lot of wholesaling groups. If you go on a lot of those like real estate groups in Florida, you go on Craigslist, you go on Facebook Marketplace, you'll find a ton of them. And there are so many off-market deals. And a lot of the off-market deals are worse than the on-market deals you can negotiate, which is weird. There's a lot of greedy, unethical wholesalers that are selling stuff at market. And they're just basically being glorified realtors without the license. And so the scary thing is unlicensed wholesalers have no fiduciary duty to the client. They have no moral or legal obligation to do anything properly. A realtor can lose their license and get sued, potentially go to jail, or even worse, having their insurance sued if they do something wrong. They lie. Wholesalers don't have that same thing. So especially in a place like Florida, you just got to be very, very careful with off-market properties. Do your due diligence and whatnot. But yeah, there's some sweet deals too, even off-market. Like depending on which coast, if you're on the West Coast or looking for the West Coast or the East Coast, I saw properties pop up 100, 200 grand still. So there's lots of stuff you can buy, especially if you're going to put in your own pool. Stuff without a pool is just super cheap. I came across a bunch in like Port St. Lucie. Again, in the Tampa area, there was a bunch that were super cheap. Near Orlando, there was some pockets that were super, super cheap. So if you're looking to get like low entry level property prices that can still rent for 1% rule, Florida definitely has that. So yeah, definitely go and explore those channels. You'll find there's quite a bit, and start talking to realtors too. That's one of the best ways, is just start calling realtors and say, hey, what do you have that's a pocket listing? What do you have off market that's coming up in the next month, next week? If you call 100 agents, I guarantee you'll find 3 properties. It's as simple as that. So if you took a week of your time and dedicated that to finding a property that's whatever you want, you call the realtor and be specific, I guarantee you in 100 realtors that 3 or 4 or 5 of them will bring you properties that will meet your criteria. So it's all about putting time in. You put that time in, you get that value. So it depends if you have the time to do it. Yeah. When is your course going to drop? So right now I don't have any course dropping, but I might be dropping something soon. That's a partnership where most of the money isn't going to go to me. It's going to go, I'm not going to take any of it. I'm going to reinvest everything back into helping other people. Be that through building more courses, building out something that's maybe paying for promoting videos or something so that they get to a greater audience, even if they're unmonetized. It's not about a business case that's sustainable makes sense because it needs to be sustainable so you can hire staff and have it run. But my goal isn't profit. It's to give back. It's to grow. This channel doesn't make a whole lot. It really did. It really did. And I didn't have the foresight. Well, my partner didn't have. My partner really was the one who wanted to sell. I wanted to hold through this because we were in a bit of a rocky period where the prices of real estate actually had not gone up at all. They were slightly down, and people had suffered 8 months of carnage and vacancy on the Airbnb market. It was actually a good slaughter. So you could get in there and negotiate 20, 30% off in some cases, seller financing. There was a lot of opportunity, but I couldn't get down there because the borders were closed. So it was, it was a crazy time. Crazy time. Hope more of those times come, not because I want people to suffer, but because I love those opportunity moments. Anwar says, hey, my mother has a Toronto property worth $800K in equity in it, but we cannot tap into it because her income is only $60,000 a year. Any advice to get a HELOC increase? Scotia declined her HELOC increase. Well, you could, talk to someone who is a mortgage specialist and helps you to build the right business case. So one, just because you've been declined at one bank doesn't mean that another bank won't say yes. It's about how you write the narrative. It's about how you put together the business case to the lender. I've had no's from one company, and then another company said, yeah, no problem. We'll get in there and we'll land no problem. So it's all about how you position yourself. $60,000 a year full-time salary isn't bad. I mean, there's definitely B lenders that will, they would definitely get 3-4% would definitely get access to that. 5% worst case scenario. For sure, there's someone who will put a second mortgage on it at 7 or 8%. So there are ways you could tap into it. That's expensive, and I think you probably prefer to if you find like 3% debt. But there are lots of B lenders who are in the 3 to 4% range. I mean, maybe 4.5 high side with how interest rates are going. But if you can lock in a fixed rate and get access to that capital and put it to work at 10-15% and borrow at 3, that's an amazing spread, right? Yeah. So the follow up to that question, Yuri asked about, B lenders, and because I'm on this question, I'll take that question first. I consider a B lender not A tier big bank. So you could argue that like Meridian and Libro credit unions and the other credit unions in Canada are also A tier. Fine, we'll call them A tier as well. BMO, TD, Scotia, CIBC, RBC, the big banks are the A tier. And then there's like B tier, which is like home equity, home trust. There's a whole bunch of these like B tier companies that exist, like dozens of them that you can find, like Magenta, and I used to have a whole list of them, but they vary in their rates from like 3% to like 7%. And yeah, I mean, it's an option for sure. I think that you could probably get access. There are lenders who will just lend on equity, even if you didn't have a job, like reverse type mortgages, where you can pull equity out of the property, 65% loan to value. Maybe you won't get 80% loan to value, but if you're willing to say, hey, we'll leave of that 800,000 in equity, we'll leave like 400,000 in the property and pull 400,000 out, and we can get a great rate because we're not getting crazy in the loan to value. There's a lender out there who's looking at net worth. There's a lender out there who's looking at equity in the home, and there are tons of lenders that do that. So go on to Kijiji and type in, private mortgage lending. You'll see hundreds of agents pop up, hundreds of agents. Start calling some agents. Hey, this is my situation. This is the credit score, income, whatever. We have X equity in the house. Here's what it's worth. You can even go a little higher and see what the appraisal comes back at. Say, hey, maybe it's worth $1.2 million instead of $1.1 million, and see what happens, and see what you can get out of the property. A lot of lenders are equity focused, and there's so much dumb money right now that's happy to be parked somewhere safe and make 3% or 4% or 5%. So there's definitely ways to get access. Don't just, you went to Scotia and that's it, right? There's definitely more options. Okay. I'm going to go up here and I get some of these questions that I missed. What's your favorite disgusting sandwich? How could I have a favorite sandwich that's disgusting? If I think it's disgusting, then I wouldn't think it'd be my favorite. Disgusting sandwich. I don't even know what that really means. I love all kinds of sandwiches. One of my favorites is a nice raw beef sandwich. It's like lightly seared, but the beef is still almost raw, nice red pink. People might call that disgusting. I love myself, some raw beef. I love some raw salmon, sushi, right, like sashimi. So for me, that would be a delicious sandwich. But I also just like a nice meatball sub too. I'm meat and potatoes kind of guy too. So I don't know, that was a weird question, but happy to answer it if it tickled your fancy. What was the most memorable time on your trip to the US or Bahamas? Oh, there's so many memorable experiences along the way. I can't even just pick one, but I loved in the Bahamas that the beaches were just beautiful. It was nice to stay in all inclusive. We didn't have to worry about the food situation or the drink situation. It was just anything you want unlimited. Yeah, I mean, the weather was fantastic. It was sunny almost every day that we were there. I miss there's almost 340 days a year of sun in the Bahamas. I miss the sun, the beautiful weather. But Canada's beautiful too, in the summer it's beautiful. But yeah, Bahamas was very nice. I enjoyed that. In the US, there was, I don't know, what was my favorite thing about the US? Disney was probably my favorite day with the kids. I loved watching the kids just enjoy themselves at Disney World and the Magic Kingdom theme park. And that was probably my favorite day, I would say. We had some really great days too in Sarasota. We went on a little trip from Clearwater. We stayed in right by Ben Mullah's house. Actually, we drove by Ben Mullah's house, and we stayed at the Marriott that was on. I think it was called Sand Key Island. I want to say, I can't remember, but right near Clearwater there, and it was beautiful. It was really nice. The beach was nice. Wasn't one of the best beaches I'd been at. It was like, mediocre. Sarasota's beach was way better, but the hotel was just so nice. Oh, it was great. And we enjoyed ourselves. We had a lot of fun. The kids had so much fun. It was nice every day. I was with my family probably 8 to 10 hours a day, at least, right? When I'm not on my phone. So, and even when I'm with them, even when I'm on my phone, I'm still sitting with them, right? So like, that was cool. I really enjoyed that. What properties are you looking to take down right now? So I'm actively looking for some sort of Lake Huron resort, like small cottages, sort of tiny house resort vibe, something like that, that was right on Lake Huron, between, say, Grand Bend and Sarnia. That would just be like, that's where I grew up. So I'd love to get something in there. That's always been on my bucket list. Even if I leave Canada, I could see investing in something like that in a corp. I'm super bullish on that area, but it's hard to find something. And then Florida is very interesting. We're working on a deal right now in the Bahamas as well. That's where I'll be relocating in the next, call it 24 to 36 months. My primary residence will be there for tax purposes. I will reside there. I will still be back in Canada to visit. I will still be in Florida and traveling around the world and a whole bunch of other places I want to go. Costa Rica included in that. But Bahamas has the most favorable tax environment for someone who wants to travel. There's nowhere, but I haven't found a country that's better, that checks enough of the boxes. No property taxes. So you can have a property there that's costs you nothing, in theory. Very much like you could put some solar into and be pretty much off grid there if you wanted to. Tax environment, you don't file a return. You personally file no return. Not like, no tax is amazing. The fact you don't pay capital gains tax, crypto tax, nope. Income tax, nope. Passive income tax, nope. No taxes. Capital gain when you sell a property, nope. No tax. No personal tax return to file. That's huge. And you have to reside in the Bahamas for 91 days. A little over 90 days a year. So you have 275 days a year you can travel and do whatever and be wherever. There are some stipulations. You can't, like, I can't have a primary residence in Canada, let's say, and like the whole point would be I'd have to sell everything, file an exit return, and leave, and then be resident for tax purposes of the Bahamas. I can't then be in Canada 6 months or more a year. I have to be in Canada less. Like, I have to visit Canada. I can't live in Canada. But you could still vacation to Canada 5 months a year if you wanted to and pay no tax. 5.5 months a year if you want to, is my understanding, and pay no tax. Again, talk to your own accountants and lawyers and whatever, and I guess your lawyer and your accountant would both recommend you not to leave, has been my experience, because they want you to keep filing tax returns here so they can get paid. And so they'll find reasons why it doesn't make sense. But when I did my own research and started talking to some people who are unbiased, it was clear to me that the exit return and the cost to leave was well worth, especially with, how did I not talk about this? Yesterday it was all over social media. It was the only thing we were seeing. The Liberals and the NDPs formed a coalition. The most socialist party and the left-leaning Liberals came together to empower Trudeau till 2025 with a full majority government. He now can do whatever he would like. He can pass whatever bills he would like. He could raise tax rates to 80%. He could lock people in jail. He can do whatever he wants. He's already proved that when he used his, Emergencies Act powers to basically subdue peaceful protesters, that he has no line he won't cross. And they've talked about bringing in a whole bunch of new social programs. They are already running the biggest deficit Canada has ever seen on an annual basis, and they're racking the annual debt to levels it's never reached before. Inflation isn't helping, the printing isn't helping, and then they want to add in a whole bunch of new great things, which, on the balance of scales is actually probably pretty good. For the bottom half, for the majority of Canadians, it's pretty great. There's some new things about, like free pharmaceutical drugs for, everyone, a whole bunch of other stuff that they want to bring in, like a daycare credit and some other stuff there are some good stuff they want to do. And I get that it'll buy them votes and they'll have a majority government, but someone has to pay for all of that. Someone like me is going to have to pay a disproportionate amount for all of that. And the only thing that's going to save Canada is the fact that we are one of the most wealthy, natural resource enriched countries in the world. We have a plethora of natural resources. We are actually wealthier from a natural resource perspective than, say, Russia or Saudi Arabia. Again, we just don't exploit our natural resources. In fact, they'd rather put taxes. Again, liberals and NDP would like to put taxes and stop producing oil and stop taking down our forests and not sell our water. And again, we have all the greatest natural resources. And for that reason, Canada could be a very, very wealthy country. Socialism, or rather like a version of pseudo-communism, could actually fly in Canada. Like, we're actually a wealthy enough country. It could work, sort of. Again, I don't believe in communism. I'm not a communist, subscriber. I believe that people should be rewarded on their merits, and people who put in no work deserve just the bare minimum. So bare minimum housing, bare minimum food. I don't want to see people starve, but you don't get to have an iPhone. Like, you don't get to have an iPhone. You get a flip phone. You get the basic shit. The problem is, you see the homeless guy on his brand new iPhone. He has a nicer iPhone than I do. That's the reason he's homeless. Or he's got a crack pipe in his jacket. He needs help, right? Like, he probably is battling some mental issues. The government should be forcing him to check in with a counselor daily to help him through his issues. And he should be able to work that off with a work program where he contributes to society in some way. Even if it's at a soup kitchen serving people food and volunteering, at least he's adding value, or she is adding value to society. That's the kind of society I like to see, where there's just so much to go around and everyone's working together. A communist society results in a bunch of people doing nothing and a bunch of people carrying all the weight. Anyway, I don't want to get into the politics of it, but that was something I did want to touch on today, is that Canada is in and headed for a really rough tax climate in the next 5 years. I could see capital gains inclusion rate going to 75%. That's coming in the next 3 years. So right now I sell properties, it's cheaper than if I sell properties in 2-3 years. Reinvest elsewhere. I'm not saying the US is better. The Bahamas is definitely better from a tax perspective, but the US is better. Florida is better than Canada. California in the US, though, is worse or just as bad as Canada. So there are parts of the US, it's hard to say the US is better, but there are states that are better, sure. Yeah, that's my take. There are so many questions. Let me see what I can do. Good to see you too, Yuri. Thanks for the comments. So how much equity do you offer a partner who has only qualifying power to refinance out a private loan once renovation is completed and the tenants are in place? It depends. If you're bringing all the money and the financing, it could be 50% of the deal in some cases. Depends how strong the deal is. It depends how much work is involved for the active partner. Is it a turnkey deal where they just have to place tenants and do management and Airbnb it or whatever? Or is it like an extensive flip that needs a full gut? That should determine the percentage. It's not the same. Just because you did 50-50 on an Airbnb deal doesn't mean that a full gut project, the active partner deserves to be paid the same. No, they deserve to be paid more because they're doing more of the heavy lifting. In some cases, the mortgage is worth 20% of the deal. Like, I would happily give 20% equity in the deal to not have to worry about the mortgage and then refinancing it again and doing the mortgage again. That effort and that signing the dotted line and all the paperwork that goes along with that and putting your name on the line for the property, that's worth something. Probably 20% of the deal, I would say, 20-25% of the deal. And from the person doing the works perspective, if I'm bringing someone on, if I had to get a private mortgage at 10% and I can have them borrow at 2%, the interest savings alone covers the 20% equity that I'm giving away. So it's actually a win-win for you getting the 20% for nothing, just signing the dotted line, and a win for them because then their actual total cost of financing is lower paying in equity than paying in a higher cost of debt. So it depends. Trudeau can pass legislation to reduce carbon emissions so that islands like the Bahamas might not be underwater by 2015. So Eva, there are areas, like, it's not that I don't believe in climate change. I do, for sure. In the last 100 years, if you look at the data, the water has risen 7 inches in the Bahamas. And there are properties that are 20, 30 feet above the water level. So that's like 600 years, 700 years at the current pace. Even if you were fast forward in the last 20 years and extrapolate, we're still talking about hundreds and hundreds of years. So it's not an immediate concern that I'd be worried about. But sure, I mean, I'm all about, doing things cleanly. There are definitely ways to extract oil cleanly. By the way, solar is worse for the planet the process of making the solar panels and all of the the waste associated with disposing of those solar panels and all the batteries and stuff that's involved in that. It's actually worse than clean carbon or clean oil. And there are ways to do it. You could scrub your coal plants so that the waste produced is much less. Why isn't there a force investment on that? The fines do nothing. They continue to pollute and pay the fines. No, give them incentives to go and invest in cleaner coal and cleaner energy. There are lots of ways to grow the economy and produce the resources that we need cleanly. And so I think there's ways that we can invest in that. And taxing it isn't a great way to do that. I think a better way is to offer incentives. And then when you offer the incentives, businesses in hordes start producing to get those incentives. And guess what? Revenue goes way up and the government taxes corporate income. So then they get it back. And then there's so many jobs going around, they get it back for all the people that are being employed as part of that incentive and initiative. So incentives can make a lot of sense, especially when they drive the economy. Like people complained about the green home energy programs that the liberals put out, and the conservatives had a program before that too, where you got paid to put in new windows. And by the way, I've done that like a bazillion times on tons of my properties where the government's paid for me to put in like windows and stuff. But that comes back to them. Less gas used for one. But more importantly, I'm hiring contractors. I'm buying from window suppliers. It's driving the economy. That money goes back into the economy in a big way, right? So, and then proving the value in the property. And then when I sell the property and I make a nice profit, they get 30% of that. So they recoup it back when they're putting those programs out, and more houses get fixed up as a result. It net benefits the economy. So I'm pro incentives in certain situations. It can make a lot of sense. However, the liberals are not about putting things together in an efficient way. For the most part, it's like you give a liberal, or really any politician these days, to be honest, none of the parties are any much better. You give them $10. Let's say a park bench is like $100,000 to build by the city. You could do it privately for like 11 grand, right? It's always like 9 times the cost to get the same shit done. And it sucks, but you go into a city office and most people are not, it's just not very efficient, unfortunately, in government. It's just a reality. Yeah. But yeah, I am for some of the things that could be done. Unfortunately, I think a lot of it will not be done. And I think that they may pass, like, if you pass a bunch of legislation to stop producing oil here, and then they just do it in Michigan across the border less cleanly, it actually would have been better to produce it here with clean incentives attached to it so that we could produce it cleaner, get it out of the ground in a cleaner way, produce energy in a cleaner way. Instead, we still consume the same amount of energy, but we just now get it from a country beside us. And we just, like, what? If we don't produce it, someone else will. It's not like, anyway, you can't act as an island in and of yourself. You have to think of how it pans out in the whole of the entire mix. Corey, yes. Everything in my personal name will be liquidated, including my primary residence. I may keep a corporation in Canada open and have some property inside of that corporation. The corporation may continue to file. The corporation may be owned by a Bahamas corporation. There may be some flow through back to the Bahamas Corp, which again is tax-free. I may own it personally from the Bahamas, I don't know. And then have the Bahamas Corp work as a consultant for that Canadian company to get, sort of deductions to get the taxable income down. I've talked to some experts and really get some expert opinions on this. I haven't formed a fully concrete plan yet, but one thing I'm sure is that the lifestyle is better, and with that, the tax is better too. How much better? We have to still debate that, I guess. And what is the best way to achieve said zero tax or near zero tax? Again, talk to experts about that. Pavleshka says, hey, Mike, if you had to buy your first property right now, where would you be looking? I'm specifically in BC. So if I was going to look in BC, I would look more rural BC. I wouldn't be in Vancouver or Vancouver Island or one of the really expensive places. I'd be looking a little bit further out, only because there's way better value. Where you're not competing against institutional stupid money. And there is just a ton of institutional money that wants to park at, a 2% return. And they're fine to borrow out. They can borrow from their, insurance policies at 1%. And so if they go at real estate with a 3 cap rate, they're like, oh, I'm so happy. But like you as an individual will have to go borrow from the bank with rising interest rates at potentially 3 and 4% in the next coming couple years. That's going to happen as rates climb. And so you would be borrowing at 3.5%, and the property's at a 3 cap rate or a 4 cap rate. After your expenses, you're not making anything. You're cash flow negative. That's not interesting. That's speculating. I'd rather just buy a REIT if I'm going to do that, take less risk, be more diversified, and just at least get a little bit of cash flow out of it and speculate on the real estate prices appreciating that way with some leverage through the REIT, the publicly traded real estate investment trusts, as opposed to buying property in, like, say, Vancouver or Toronto right now. Even London is getting beyond what I would consider affordable. And some of the numbers are not working anymore, especially near Fanshawe College. There's a ton of properties there that are selling for $800,000 and $900,000 that are 5-bedroom properties renting for, in my opinion, $2,500 to $3,000 is the real rent. The mortgage is $4,000 a month. They're losing $1,000 a month. Don't buy that stuff. Why are the comps so high? People are just bidding stuff up, and it's just insane. So in certain pockets, even in London, it's getting to the point where I think a bit of a correction is necessary. There are still points of value. There are still houses I'm seeing that pop up for 500,000, 600,000 that have value, but it's far and fewer between. So again, I'm not an expert on BC, so I would say go to a more rural town that's not so rural that it has no people. Like, you want it to have lasting infrastructure and be here in 50 years. So I would say a town with like 50,000 people at least as a minimum. Tell us more about it. I'm good net between 10 and 100. So I don't know what net 10 and 100 means. Unless you're talking about the secret millionaires thing. It's anything more than 2 million net worth minimum, or greater than 10 million in assets, or if you don't have the other two things and you can show more than $1 million in net income, that would also qualify you. But I think it's easier just to have $2 million net worth, net of all liabilities. Corey, are you planning on selling all of your Canadian properties to do that? Probably. We'll see. I could also have a Canadian corp that continues to hold as well. Rocky says, hey Mike, is it still possible to successfully burr student rental properties in Windsor or London, or should we wait for a market correction? Rocky, it's potentially possible to burr in any market anywhere. It gets harder to burr when the market is hot. People will overpay for stuff that needs to be fixed up, and they will sometimes pay for more than the actual renovation budget allots. So they end up losing money. In the end, it's not a full burr. That said, people are still burring. The exit is really great when, it's a hot market. So I would say burrs are easier to do in a hot market, in that sense that, like, by the time you're done the 6-month or 8-month project, the property's appreciated 10%. So half the burr was like not even your involvement at all. It's just shit dumb luck that the market appreciated a ton. It's definitely harder to burr in a down market, but you can negotiate better deals in a down market. So, yes, it's still possible, but you have to spend, like, I could burr a $200,000 student rental in 2012. Now it cost me $600,000 to buy the same thing. The numbers still work the same. I can still burr it. It's a lot of work right now. You're competing, so it's harder to find those opportunities. But yes, in theory, you could still burr in any market. It's easier to burr in a rising market because the appreciation carries you for free. Thoughts on KWEB, Chinese NASDAQ ETF, or China in general? Lucas, I was extremely bullish on Alibaba as an example. And I got rid of my shares in, I want to say, February as it started to dip. I was like, I'm just gonna, I don't want to have any more losses. I took the L on it. I wasn't down hugely because my average cost was pretty close to market, so I didn't take a loss on it really. But it's a shame to watch it pump 50% up when I like the company. And to see it recover like this has been sad to watch those opportunities miss out. But it would have been sadder if I had held and watched it dip all the way till, before last week. So no regrets. Bill Bowen says, hey, I'm here in London. Things look crazy. Wish I got into things 5-10 years ago. Starting to look Windsor way or possibly North Sudbury way. Well, I think Windsor's just a worse city all around than London, economically speaking. A number of other economic reasons why it shouldn't be at a same price point as London. So there's, if you're thinking that Windsor will become London, it won't. It isn't. But I mean, there's some value there, sure. Still, it's far, but there's value there. There was a lot more value there in 2016 than there is now. Yeah, agreed. The tenant quality is much lower. The market fundamentals economically are much lower. The rents are lower too. It's very blue collar, it's true. Chad, how you doing? Good to see you on. For the 50 people that are live on the stream and the other 50 people who have been in the stream, smash that like button. That'd be cool. If you're watching this right now, just like go tap that like button. I don't charge you anything. I play no ads, so it's not going to cost you anything. It's free. Just click it. If you know someone who's a multimillionaire who might benefit from my content or want to join the group, send them this video, send them my Instagram. Yeah, I would say that that's the end of this stream. I put my kids to bed. I went a little late today, so I'm already past 8 o'clock. Thank you so much, everyone, for watching. Remember, the secret to unlocking a wealthier you is 3 levers in your control of your financial future. Spend less, earn more, and maximize returns on the difference. That's it, guys. That's right. Across the river, across the bridge, is Detroit, where houses are like 50 grand, 100 grand, and you don't even want the houses because the tenants are so bad they'll destroy the house. It's not even cash flow positive. I don't invest in the bummy areas. Avoid those areas. It looks like there might be cash flow, but there isn't. Anyway, have a great night, everyone. We will see you next week. And of course, see you in the comments. Smash the like button if you're watching the replay. Find me on Instagram, on Facebook. Give me a like there, and let's connect. Bye, everyone. Have a good Wednesday.